Stephen Meade again, back with another BullsEye Guy podcast. I'm doing it direct. We've been doing a lot of interviews, fun stuff, but today we're talking Bitcoin. Yes, Bitcoin, blockchain, crypto, a little bit of everything. I've got my notes here, got my pen. We're ready to go. Some of this is going to be consumer related, what's called retail, but then eventually we'll move into the enterprise institutional side. So let's go. Are you too late? The answer is no. A lot of times people are like, oh, am I too late for Bitcoin? Did I miss Bitcoin? The answer is no, you didn't miss it. It's still going to, in my opinion, this is all opinion generated here, it's still going to go up. There's a lot of reasons for it to go up. We've covered it in other shows. There's a lot of information out there, but I just did a podcast on the top 10 reasons I think it'll go to 100,000 in 2021. I did that December 20th when Bitcoin had just passed 20,000. And a bunch of things are happening. Institutional buy-in, the ego of the big guys, the big names who need to protect their reputation by making decisions, the number of onboarding of retail clients, retail again being consumer, the access to wallets, a ton of great stuff is out there. So are you too late? Absolutely not. Again, I get asked the question a lot. Well, do you regret not buying Bitcoin earlier? And I have to joke, I don't regret not buying it earlier. I bought it in 2012, $1,000 worth when it was $3. Think about that. Not $3. I bought 1,000 Bitcoin when it was at $3. My purchase was, I think, 3,000. It went up. I don't regret buying it early. I regret selling it. I sold it at probably $550, thought, oh, this is, something I didn't understand. I made a little money and was out. My regret is not buying early. It's selling early. If you own Bitcoin, try not to ever sell it. Long term, it's going to be a great investment. What do you look at from an investment for Bitcoin? You don't look at the price. You look at the percentage. And what do I mean by that? The price of Bitcoin right now, 50, 51,000. It's been fluctuating. But again, if you own $50,000 worth of Bitcoin, or you own $50 worth, if all you can buy is $50, and that goes up 10 or 15 or 20%, the percentage of the Bitcoin, the unit, goes up and down the same whether you own $500,000 or whether you own 500. So as an investment, what you want to look at is look at the percentage that Bitcoin's been going up. That's really what we want to focus on. Price is always going to go up. It's like saying, oh, am I too late to buy gold? There's people buying gold now, a brick of gold. Gold's going to continue to go up and down and fluctuate. And I used to get that a lot. People go, oh, well, what does Bitcoin do? It doesn't make anything. Doesn't have any employees. True. How many employees does gold have? Gold's an asset. So let's think about that for a minute. Number two was don't look at price, look at percentage. Number three, as I'm marking these off, as we talk about gold, is gold a currency? Technically, no, but it's a type of store value, but it's also a type of payment. What do I mean by that? You could buy a brick of gold. If you were fortunate enough to be able to afford it, a brick of gold right now, an actual official bank brick, is probably over $600,000. So let's bring it down. Let's say a brick of gold is $500,000. It's tough to buy. You don't walk around with it in your pocket. Most people who buy gold say, oh, well, I own gold. I own something tangible. No, you don't. You own a digital certificate telling you you own gold somewhere. These people that go, oh, well, Bitcoin's just digital. I own gold. It's real. Well, it isn't supposed to be held in trust somewhere, but you get a digital certificate that you trust is attached to gold being held somewhere. Why is that? Gold's not very portable. It's tough to carry around a brick in your pocket. Tough to get people to take it. But again, you could buy a $50 gold coin. You could buy a gold inglet. You could buy a smaller percentage of gold, like a coin. Does it act as a currency? Sort of. Not everybody will take it. Some people will take gold. You might have to sell it and get cash, What does that have to do with Bitcoin? Same thing. A unit of Bitcoin's $50,000. You could buy a smaller unit of Bitcoin. Will everybody take it? No. And then sometimes you might have to convert the Bitcoin to cash, just like you would have to convert gold to cash. Why is that important? Number 3 on my list. Bitcoin is not going to be a global currency. It's just not set up that way any more than gold. Gold can act as a unit of payment. It can act as a unit of stored value. But acting as a true currency, it probably won't get there because it fluctuates. It's too difficult. If you put $100 in your bank account and then you've got a debit card, that debit card again is digital. Everybody's like, oh, I have money in the bank. No, you don't. You have a digital unit on a debit card that when you swipe, it moves ones and zeros from one bank account to another. It's all digital. It's just different types of digital. So Bitcoin as an actual currency, probably not in a global sense any more than gold. Gold can be used, but it's not. Bitcoin is payment. This one's kind of fun and interesting. Can Bitcoin be a payment mechanism? Is Mastercard and Visa going to accept Bitcoin as payment? Are banks going to use Bitcoin as payment? Well, let's talk about banks. Are they going to? Absolutely not. Ever. Why is that? Not that Bitcoin's bad. Bitcoin's amazing for what it's designed to do. Just like gold. Gold functions with a great set of parameters. Money functions differently. The money that moves through the network for banks has a different set of characteristics around it. One of which is lack of volatility. What do I mean by that? Bitcoin, we can go look. It's up, it's down. It might be up 5% or 10%. If I pay you $3 and Bitcoin goes up or down, you don't care. If I give you $3 US and you have pesos or Argentinian pesos or real from Brazil, fluctuation doesn't matter. When you move to business, B2B, kind of what we do at Moneta Pro, we built a business settlement platform. $3, $4, $5, $10, $30 million moving through the network. Fluctuations matter. You can't send $30 million into Brazil and have it fluctuate 2 or 3%. That's why there's an entire industry around what's called hedge, arbitrage, currency fluctuation risks. Companies hedge against the fluctuation of sending money into Brazil or trying to get cash out of China or not wanting $1 trillion Zimbabwe note. You need a stable unit. You need a stable coin. That's what banks, in my opinion, are going to move towards. They're going to have a stable digital unit. Ripple could be Stellar. It could be Graphene. At the end of the day, it doesn't matter. $1 is $1 across the banks. So whether that dollar equivalent stable coin in Wells Fargo is running on Ripple, or it converts to a Tether, or it hits a JP Morgan coin on a Stellar, if they're all equal to $1, the underlying technology, the blockchain that runs it, they're different types of blockchains. Blockchain, Bitcoin, they're not all the same. I'll cover that in a minute, but it doesn't matter. You need a stable unit of measurement. Bitcoin's not set up to be stable. Never is, never will be. But that's okay. It's not designed to be stable. There's other better blockchains and other better technologies. And like I said, Tether's a great one. USDC, there's cool stuff out there that are designed to be payment. So now we're into payment. Number 5, the Bitcoin Maximalist. This is when now I'm starting to transfer into the institution, guys. And I love institutions. We've raised money. We've had 3 public companies, small companies, and I'll cover that in a minute. But the word is, are you a maximalist? And I hear some of the quote big guys, the institution guys, oh, Bitcoin won. We, the institutions, we didn't get into the end because we needed to wait, and Bitcoin won. Bitcoin beat out all the other cryptocurrencies. Well, that's a misnomer right there, because the cryptocurrencies are crypto tokens. They're not designed to be currencies. They function differently. Again, these are all on my list. We're going to get there. But Bitcoin didn't beat out the other cryptocurrencies. There's no such thing, in my opinion, as a Bitcoin maximalist. That's like saying gold beat out all of the stocks. They're not the same. Bitcoin, again, has a function. So let's talk about it for a minute. Blockchain. I think most of you know this. If not, a little bit of a simple education. Blockchain is the technology underneath. When people look at me and go, oh, Stephen, are you a blockchain company? Moneta Pro's no more a blockchain company than you're an internet company because you have a website, right? The internet powers all kinds of industries and technologies. The internet powers the entire banking industry by allowing, well, for the most part, the old ACH Swift Fedwire is probably not on new stuff, but you've got websites, you have software, you have Zoom, you've got all kinds of technologies. The internet powers those technologies, but the industry, that's what the industry is. There's a $1 trillion industry of real estate, and the real estate has a website, and they use a PDF, and they're using Zoom, and they're using Skype calls. They're using technology that the internet empowers. Blockchain's the same. Blockchain empowers the technology. One of those things blockchain does empower is Bitcoin. Super cool. Has a bunch of cool rules that are built in, some really interesting skills, some things that it does. You've got other blockchains, Ethereum, again, a great one that's out there. Ethereum does different things than Bitcoin. They're both an underlying component built on blockchain, but different skills, different rules, different things you can accomplish. It's, to me, the difference between when I used to explain Ethereum versus Bitcoin. Bitcoin to me is like gold. We'll get there and explain the difference. Ethereum to me was kind of like an iPhone. When the iPhone came out, the iPhone's kind of cool. It was a phone. What made the iPhone cool? Not the phone, the apps, the architecture of the software that enabled other third parties to develop apps and put it onto the iPhone, where now on the iPhone, you click the button and that app ran. Ethereum had these things called dApps, which were basically apps that ran on Ethereum. So Ethereum has a completely different function. Smart contracts. A lot of work now is coming out around NFTs, non-fungible tokens. What's cool about an NFT? If I'm a musician and I put a digital song out, people can copy that song and share it, and I get no royalties, no benefit. I might write a smart contract on my song as a non-fungible token and write a contract attached to it through blockchain that says, hey, if you're in my fan club, you get the song before everybody else. Only in the fan club, it's 30 days. For those 30 days, you can't sell it. You can't do anything. But if you share it with 3 of your friends, if that friend joins my fan club, they can hear the song too, and you earn points. Now, those points might be tokens you can spend in my fan club. They might be points. There's not much difference. But again, you can write rules on digital content. You can write rules on legal contracts. That's what a smart contract is. It allows you to write a set of rules to control things in a digital world you could not control before. Does things better and different than the internet. So again, blockchain is cool. Bitcoin has a function. Now we're moving to cryptocurrency. They're not currencies. Again, I don't think Bitcoin is a currency any more than gold is. It has some payment functions, but it's not a currency in the sense of how we understand it. Bitcoin, to me, again, in my opinion, Bitcoin's like gold. A unit of gold, $500,000. A unit of Bitcoin, $50,000. $50 gold coin, $50 worth of Bitcoin. Percentages go up and down. What's the difference? Again, with gold, we as a society don't know how much gold is out there. We don't know how much more can be found. We do know that it's basically mined. I don't know how it's mined out of Zimbabwe. I don't really care. But we also know the more it's mined, the more expensive it gets because it gets harder and harder to find gold and extract it. But we don't really know what that ultimate supply or amount of gold that will ever be found is. Bitcoin, because again, some rules, not really smart contracts, but some ways the technology of Bitcoin is built on blockchain, it has a finite supply. It has a built-in supply where there will never be more than 21 million units of Bitcoin. Imagine if somebody came to you and said, hey, tomorrow there will be no more gold. All the gold that's ever been created or found in the world, that's it. We believe, you would think, the price of gold will go up. That's what's driving Bitcoin. It's supply and demand. As more and more people come on trying to buy Bitcoin, there's less supply, but the rules within Bitcoin, again, similar to gold, as more Bitcoin gets mined, it gets more difficult to create and mine more Bitcoin. Now, again, I'm not going to go into all the technicalities. If you really want to know, there's a million people out there that want to talk technical. I don't care technical. I don't know how blockchain works. I know how it works for me. I know what it does. So Bitcoin's like gold, and that's what I really like about it. That was number 7. Number 8. What have we got on 8 here? Aha! This is one of my new sayings. Very fun. And especially institution guys. I love this. Big money guys. They're all into Bitcoin. You know, they had to wait. And it's fine. They're more risk averse. They're not early adopters. They needed a bunch of metrics. And, you know, Michael Saylor and the guys have jumped in, and Scaramucci, and I love Salt. And they're finally all in. But again, this is where you hear that conversation about a Bitcoin maximalist, and they've won. My joke, trying to figure out Bitcoin right now is like trying to figure out email in the 90s and you miss the internet. Let me say that again. Figuring out Bitcoin right now is like trying to figure out email in the 90s and you miss the internet. What do I mean by that? Again, let's look at the comparison. These are my personal comparisons. You may have different ones. You may have other people you like better. It's okay. Bitcoin to me is like gold. If Bitcoin's like gold, then you've got a certain what's called market cap. Right now, the market cap for Bitcoin is about $1 trillion. I like round math. You can call me on it, but you can't really call me on it because it fluctuates. It could be higher or lower by the time you see this. But using round numbers and round math, a unit of Bitcoin right now, 1 BTC, is about $50,000, which correlates to a market cap for Bitcoin of about 1 trillion. Kind of cool. If we're comparing Bitcoin to gold, which again, that's my analogy that I like, the market cap for gold is $10 trillion. What do we know about gold? Again, finite supply. We think it's rare, more expensive to mine, but we don't really know how much is there. Price goes up and down. Bitcoin, if Bitcoin's market cap were to grow from 1 trillion to 10 trillion, the correlated price of a Bitcoin unit should go, again, if we just use simple math, a lot of other parameters, should go from 50,000 to 500,000 when market cap goes from 1 trillion to 10 trillion. So as we look at that, even if Bitcoin were to compare to gold, which is amazing, it's still only 10 trillion. And why do I say only? That's 10 trillion only. Yeah, only. In comparison to the stock market in the US is 70, 80, 90 trillion. Globally, it's a bigger market than that. So Bitcoin has a great aspect of what it does. Cryptocurrency, to me, are not currencies. Most cryptocurrencies that are out there are glorified penny stocks. And what do I mean by that? Let's talk about that for a moment. In the US, you have people who look down on Bitcoin, or they look down on the shit coins, the shite coins, the Doge coins. Oh, those things are crap. You know, they're poo-pooing tokens. They're poo-pooing cryptocurrency. Again, I don't like calling it currency. I like tokens because tokens represent something like stock. That's no different than the US market right now. The US has layers of market at the top, the big dogs, the New York Stock Exchange, ringing the bell. Those are great. The NYSE guys look down on the Nasdaq guys. They may not admit it, but If you could go out on the New York Stock Exchange and ring the bell, good for you. But those companies are big companies, 7, 8, 10 years. Palantir, I think, just went public 17 years later. That's great. Those are big companies. Low volatility in the stock. You know what you're getting. Basically, most of the companies will make it, not all. You know, you've got some that fail, market shifts, but the New York Stock Exchange is it. That's the big kahuna. Underneath that, Nasdaq. I love Nasdaq. Ed's the vice chairman's a friend of mine. Like, Nasdaq is the aspiration for a lot of technology companies. And Nasdaq is cool. If you can get on the Nasdaq, that's a great accomplishment. There used to be the American Stock Exchange. Now, any of you watching this, you need to know I use what's called retrospective evolution. Retrospectively, what was in the past? The Amex, the American Stock Exchange. It merged in 2008. What did the Amex do? Mostly traded ETFs, electronic trade fund, ETFs. There's all of this excitement around Bitcoin ETFs. The Amex used to exist just to trade ETFs, and ETFs and Bitcoin are just now being created. Crypto ETFs are just now coming on. There was an entire exchange before for the market around ETFs of trading stock. Underneath there, the pejoratives, the low class. Again, I love this space, but the NASDAQ guys will look down on you. In a real world, it's called micro-caps. That means the micro capitalization. Remember, again, I talked Bitcoin's $1 trillion market cap. Gold is 10 trillion. The whole stock market is tens of trillions of dollars of all of these companies' stocks. But down here at the lower level is the OTC, the over-the-counter, the micro caps, as it's tried to professionally be called. They're penny stocks. Most people look at you like, oh, you're on a micro cap. You're a penny stock. It's pejorative. The financial industry looks down on penny stocks, and for some respects, they have a right to. What do we know about penny stocks? Well, they're risky. Most of them don't work. They're highly volatile. But if you're honest with yourself, you're buying a 10-cent penny stock, not because you think you own equity. Equity is a fallacy. Again, you legally own equity in a penny stock, but you invest in a 10-cent penny stock because you think it's going to go to $1. You don't invest because you have equity. If that company goes under, you're so far down in line, you're not going to get money back. But that's the risk of being at that level. These companies are at a lower level. They're highly risky, highly volatile. They're highly speculative and manipulative. And what I mean by manipulative, I've got all my notes here. These are all things that I've learned. I've had OTC companies. A penny stock has different levels. Down at the very bottom, they're called pink sheets. So some of you know this. You're like, this is old hat. Other of you may not understand. Pink sheets, very risky. They're what are called unaudited. Unaudited means there is no audit. There is no financial structure. There may not even be transparency into what the heck the company's doing. Pink sheets are really risky. And some companies will start purposely in the pink to try and build before they have to go level up to audits. And audits are expensive. If you get audited, it means you have more structure. You've got more credibility. And the stocks at this level are manipulated with press releases. What do I mean by that? Look at Elon Musk. Again, I love Elon. Elon's pushing out a press release, a meme, the new version of press releases, meme on Dogecoin. Goes up and down. eForce, I love the eForce guys. Ken has done a great job. They're launched out of Malta, but they attached Steve Wozniak, big name, did the Wozx coin, WOZX. When you research it, almost all of the press, all of the PR has nothing to do about eForce. It has to do about Steve Wozniak being attached to a company for one of the first times in his history. The Wozx, 10 cents to $3. It's easier for a penny stock, a micro cap, to go from 10 cents to $1 or from $1 to $3 than it is for an Amazon to go from 3,000 to 9,000, or easier than a Bitcoin to go from 50,000 to 150 or 500. A 10-cent penny stock can move to $1. That's what cryptocurrencies are. They're not trying to be currencies. They're not payment. They're glorified penny stocks. Retrospective evolution. If we look backwards, what are the advantages of a microcap? Lower cost to market, lower volatility, initially, and then you can build market makers. You can move the markets. You can move stock. Liquidity in a public vehicle gives you the ability to raise more money, and ultimately you might get acquired. You move up. You uplist to Nasdaq. That's what cryptocurrencies are. That's why I joke, email versus the internet. If you're trying to figure out Bitcoin, that's figuring out email. The bigger market for blockchain is digital tokens, the quote tokenization. Again, I don't like that word because so many people try to tokenize everything. But when you look at a company early on, the ability to raise money in the public markets, it gets more difficult as you move upstream. It takes longer. It's more expensive. At the very low level, you could actually do what's called a DPO, a direct public offering. If you had a market of people, if you had a customer base, if you had a way to go out and market your stock at an OTC microcap level, it's much less expensive, much less overhead, and the ability to go from 10 cents to 50 or $1 is substantial, but it's risky. It's extremely risky, but some of them work. The execution's there. That's what I mean. Email, internet, Bitcoin, digital tokens. The digitization of companies going direct to raise money is going to revolutionize the entire finance industry. I have people come to me all the time. They're like, oh, we've got this great offering, Stephen. You should invest. It's equity. You're in at the angel round, and our next valuation is going to be they're coming in at 5 million. The next round's going to be 10 or 12. That's a hit, a 1 or a 2. Not interested. I'm locked into that equity for 3, 5, 10, 17 years like a Palantir, 11 like an Uber. If that company came to me and said, hey, here's some equity, and here's a separate digital token, like a liquidity token, that if we're successful long-term, you still get your equity, but short-term, we've created a digital token to not only potentially give you the investor liquidity much faster, but empower the company to raise money using a digital token in a public market, and that money is raised without diluting the parent company. Fascinating world. The way companies are going to raise money using digital tokens. Blockchain, again, the blockchain runs the ability to do this. Retrospective evolution. You need to look backwards to say, what's worked in the environment of investing? What's worked in corporate structure? What's worked in what's called pipes? What's a pipe? A pipe is a private investment in a public equity. You get investors in that says, hey, invest here at a discount to the stock price, but when we go out, you'll be able to get your stock at a certain period in time. In the US, there are restrictions for 6 or 12 months, but you get your stock, which potentially gives you liquidity faster than equity. You need to understand digital tokens, the digitization of the stock market. That's the difference between email and the internet. Bitcoin is email. Digital tokens of how companies raise money, that's the global stock market. Multiple trillions of dollars are going to be raised using new technology. And if you're not following that and you don't understand it, you're going to miss it. So that's it. I think that's my 10, my levels, my crypto, volatile, press releases. We've covered it all. Wrapping up. Stephen Meade, another BullsEye Guy podcast. Hopefully you enjoyed it. Check back next week. Another great, a couple great topics coming up. I know we have some really cool guests lined up as well. So again, Stephen Meade, the BullsEye Guy. Thank you.